Hi guys, welcome back to Father and Son Investing. We're going to talk about Matterport once again today. Now I know a lot of you are feeling the blues here because the stock price has come down significantly. Others may be licking their lips thinking this is fantastic. It all depends on your point of view or your perspective. Today I want to talk about what is it that you own if you own Matterport stock or if you're thinking about buying it. I'm going to give you a 30-second clip from Peter Lynch talking about the importance of knowing what you own. Then I'm going to spend my 2 minutes talking about what it is that I own with Matterport. We'll then cover the importance of digital twins. And finally, we're going to talk about taking advantage of price declines, again using a quote from Peter Lynch. So let's get started.
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. And that's true, I think, about 80% of people that own stocks.
All right, I'm going to give you my 2-minute take on Matterport using this slide from their third quarter presentation. Matterport is a company that creates digital twins using technology and software. A digital twin is a digital copy of a real space. That real space can be indoors or outdoors especially now that they have acquired Enview. Digital twins have multiple uses as broken down into this pie where it displays 6 different uses. In terms of design, it saves time and gains efficiencies laying out a retail space digitally before doing it physically. In terms of build, it improves quality and streamlines workflow. It promotes maximum engagements and minimizes vacancy when it comes to rental units. In the corporate world, it allows companies to operate more efficiently, increasing their return on investment and reducing their costs. In the industrial and commercial world, such as insurance, it decreases the risk and increases compliance. And when it comes to repairs, it reduces time in the field by allowing inspectors to inspect remotely. The company has created lots of integrations with other various companies' software such as Autodesk, and even recently now with the AWS Digital Twin website. All right, that's my take on Matterport and what it does. Hopefully you could do something similar based on your due diligence of evaluating this company. We're going to quickly turn to digital twins and their value. This is a white paper that was written called The Digital Twin: Realizing Business Value from Physical to Digital Convergence. Hopefully all of you know what a digital twin is, so we're not going to cover that little paragraph there. I want to jump down to the business value of the digital twin paradigm in this article. It lists 5 things there: preempting asset maintenance needs, reducing costs, reducing asset downtime, improving plant efficiency, optimizing process times, and reducing time to market. In terms of the lifetime customer value, industries can employ digital twins to evaluate and deploy new operating regimes that were not necessarily a part of the original value proposition of their assets. So companies can now take digital twins of their buildings, of their outdoor spaces, and even the products that they make. Although Matterport isn't at this point involved in making digital twins of products, I would not be surprised if somehow that doesn't evolve into that in the future. But companies can take these digital twins and start using them to create propositions, value propositions for the assets that they hadn't even imagined when they acquired the assets. This then can generate a veritable hotbed of activity for igniting innovation within a company. And it can provide an organization's ecosystem of teams with data necessary to build next-generation products or manufacturing processes. I think the value of digital twins is just now coming into play. I think that's why AWS launched their digital twin website recently. Thankfully, they included Matterport as a partner in that. AWS realizes how digital twins will be a value-added process for their customers, and they also realize it's going to make them a lot of money. I think if you're invested in Matterport, you need to look into digital twins and what they can do and try to have some imagination of how this might work out into the future. All right, lastly, I want to talk about taking advantage of price declines. Listen to this from Peter Lynch.
So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated.
So I think the question one has to ask themselves is, if they thought it was worth buying Matterport in the 20s, how could it not be worth buying Matterport now when it's $10.33? Now, I did not think Matterport was worth buying in the 30s, and I didn't buy it in the 30s. I did buy some in the 20s. I have picked up some more as it has come down. So why, if we think that Matterport is worthwhile investing in, then why would we not want to take advantage of price declines and be purchasing more? When it comes to its market cap, it's now at $2.62 billion. There was a time when this was up near $7 billion, which is a little crazy for a company like this. Nevertheless, the company is on a good footing. Let's just wrap up by talking about that. First of all, they have been converting from a licensing model to a subscription model, and we see that their subscription growth is up significantly from their third quarter results. Of course, we'll be waiting for that fourth quarter result to come in, but 36% growth. In those active subscriber accounts, they keep track of, once they have a subscriber, how much more money do they continue to spend. And we see that when they measure the revenue from these subscriber accounts from the same quarter 1 year later, that there is an increase within the amount of money that the subscribers are spending. When we look at margins, their margins are fantastic. The total gross margin is 55%, and really in that subscription model, 77% margin. Not only do they have great margins, but when it comes to their balance sheet, they have no long-term debt. None. Zero. When it comes to their cash and cash equivalents, they had almost $150 million just sitting around waiting. Of course, they picked up some more money when those warrants were exercised, but of course, they spent some more money when they acquired Enview. I also took a little bit closer look at some of the financials out of their third quarter result. What struck me here is that the company was already profitable in 2020 before it went public via the SPAC merger. Still looking at their third quarter financial results, look at their GAAP gross profit and gross margin. And then we see that they're going to have a whole bunch of more expenses which have increased significantly. And hopefully this will provide a valuable return on investment. That's really the question here, is whether these additional expenses that they have been making are going to pay off in the short term and the long run. Their research and development costs were close to quadruple what they were the year before, and their selling and general administrative expenses are also close to quadruple what they were the year before. That's going to wrap it up for Matterport. I really think that is the big question here, is will all of these additional expenses, the research and development and the extra selling and general/administrative expenses, provide a return on investment for the shareholders? I personally think they will. I think it remains to be seen exactly how long that's going to take. I am looking at this company really for 5 years, 5 years holding this stock and waiting to see what it can do. In the meantime, I think it's a great time to take advantage of price declines. My plan is just to keep taking nibbles as the price goes down. At some point, obviously, the price will bounce back. And what I will have done is just average down my average share cost. I hope this information was helpful for you. If it was, please give us a thumbs up. Share this information with a young person in your life and make investing a family affair. Until next time, enjoy your investing.